So welcome again everybody, it's Stuart here from Hot Forex. This is our intraday trading strategy webinar. A bit of a change of topic from what was expected today, but hopefully we'll all get something from that. And there you go, I've said hopefully again. So before we get going, let's go through some admin as usual. So the disclaimer before we get going as well. This material is provided as a general marketing communication for information purposes only and does not constitute independent investment research. Nothing in this communication contains or should be considered investment advice or an investment recommendation or solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in FX and CFD product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Okay, so welcome everybody. Hopefully you can all hear me. Any problems with the audio or the system, and we've had some technical problems in the last couple of days about connecting our servers with some of the GoToWebinar links as well. So we've not got our usual full house today, so do email us at webinars@hotforex.com and we'll try and get to the bottom of it and get it sorted out for everybody. Okay, so those of you who don't know me, I think most of you in here actually have heard of me before or heard me talk before. I'll briefly, my name's Stuart. I've been trading my own money since 1997. I have 4 key things I try to stick to. Do what's probable, keep it simple, look at multiple timeframes, which we'll look at today in an intraday timeframe basis, and to know yourself. It's by far the most important thing, regardless of whatever else you use, whatever system, whatever timeframe you trade, what indicators you use. It's all about you and the markets. It's about accepting losing and accepting risk and keeping the risk small. If you keep the risk small, you can stay in business. Stay in business, you get more experience, you get more confident, and bum. And on an intraday basis, you can do that very quickly. I've been doing this for nearly 20 years of my own money now, and I varied the time frames I trade in. But for me, it's the end of day candle I tend to do most of my trades off. Some of you might be different. Most of you are probably different, but I know that fits with my time scale, my lifestyle, and my personality, and that's what you've got to find. I say some of you will be really good scalpers, others of you will be more interested in swing trading, holding things for longer over time frame. But anyway, it's all about you, and we'll talk about that as well as we go through today. So we'll talk about my intraday rules, and some I've adapted, some I've taken from other sources and things that work for me. Timeframes, discipline, energy, and patience. It's all those things, patience, discipline, all very boring old words from a very boring old man. But in trading, it works. And patience, discipline, self-control, emotional control, understanding your emotions, all those sort of things, which I talk a lot about in lots of my other webinars, and I can talk for hours and hours and hours about it. So steps to go through each day. My books again. A lot of you will have seen all this before and heard all this before, but no harm in repeating it. So let's get going. So are you designed to be an intraday trader? Take a step back. So you've got a lot of time in your hand. You can sit in front of your screens all day, or you can follow your phone around. Smartphones have apps all the time, but some of us, and typically it's to do with the psychology of us or the physiology of us, as we're made up. Some of us are inherently bullish. Some of us are inherently bearish, and sometimes it's very difficult, having made a decision in your head that you're going to go one direction, you're going to go bullish, the market's going to go up, to suddenly the market to tell you that you're wrong and you've got to change your mind, or that you're wrong and you've got to get out. And that's what the markets can do, especially intraday. The volatility on intraday can suddenly, the 1 hour candles can be suddenly going, have a nice morning, 1, 2, 3, 4 hours, all nicely going up, and then all of a sudden something happens and it's reversed, and those 4 hour that 4 hour rise over those 4 hours, or those 8 candles if it's 30 minutes, or 16 candles if it's 15 minutes, can suddenly be wiped out in an instant if something suddenly happens, and you suddenly got to switch from being a bull to a bear. That's what you got to get in your head. That's why I talk. No sound. No sound. Everybody's saying no sound. No sound. Otis. There's only Otis saying no sound. Can everybody else hear me? No, oh, he's saying he's okay again now. Okay, I missed that. Yeah, I hear you. Barbara. Hello, Barbara. Wesley. Hello. Good. Right, I'll keep going then. Sorry. Otsil. Sorry, you didn't miss very much. I was talking about bulls and bears, the picture that's still on the screen. So, especially intraday, you suddenly got to change your mind, and that's when it becomes quite emotional. Oh, well, that's when it becomes quite stressful, because you've got to do this constantly. And the lower the time frame, the more likelihood is that you've got to change from being a bull to a bear within a turn of a coin or a flip of a coin. So it's all about you, like I keep saying. It's not the markets, it's not your broker, it's not Hot Forex, it's not your robot or your EA, it's not the guru or this guy or this lady that's telling you what to do, or this latest thing you found on the internet. It really is about you. And I'm saying it's certainly not me either. So you've got to understand yourself, physically, mentally, physiologically. What sort of trader are you? Are you designed to be able to deal with these very short time frames if you're a scalper, or the longer time frames, being able to end your trades at the end of the day, go to bed comfortable that you've got no exposure to the market. You're happy that you've closed for a few pips or 10 pips, or you've closed your trade with a small loss. That's all part of it. So know yourself. So are you happy to jump off this diving board into the ocean that is a trading world? I talk about the ocean a lot because I was born and live by the ocean now, and I've born there. I like living by the sea. Are you the sort of individual guy that Pharaoh makes his own way in the world? Plows his own way, sometimes against the waves, or are you the jellyfish here that's looks very angelic here on this picture and floating about in the sea, but you catch some of these tentacles, you can get quite a sting, and that's what the market can do. So it really is about knowing yourself and how you see yourself and how you perceive yourself. And I can't do that for you, and nobody else can do that for you, and don't let them. Look yourself in the mirror and decide what sort of trader you are, because what sort of person you are, because that will dictate what sort of trader you are. There's no point in trying to be a scalper, trading off 1 minute or 5 minute candles, if you're very emotional, or if you're a born gambler, because you'll end up just throwing your money away. There's also no point in being a swing trader and holding trades for 2-3 days or weeks. If you want the action of lots of trades a day, you want to be able to close something. You can't sleep at night because you've got a trade open and it's nagging away at the back of your mind. So again, you've got to know yourself. All about you. And again, those of you that have heard me before, I talk about this all the time. So scalping is these 5 minute, these very quick trades, very quickly, 1 to 5 minute time frames. So some people think because it's fast, it's easy and it's profitable. It's not. So that's really when down to these short-term time frame trades. Intraday strategy, you need, the other thing with scalping or even the shorter time frames, you do need a lot of attention to take the trades. You've got to study them throughout the day. You want to be looking at, especially if you're scalping, you want to be looking at the high liquid tight spread trades. After 6 o'clock GMT, London closes. That's where all the clearing's done. That's where most of the world's forex goes through. When New York morning is open and London's open, that's the big deep pool. That's a big deep pool of liquidity, and that's when you want to be trading these shorter time frames, intraday time frames. Even after 6 o'clock, even the afternoon session in New York, from a forex point of view, is a lot quieter than the morning New York session. Obviously, the afternoon session, if you're trading stocks, can be quite interesting, just like we had on Friday, where that huge sell-off on the tech stocks on Friday afternoon in the final hour. And the final hour of trading can be very, very interesting as well. So that final hour of the London session is perhaps the most liquid of all the forex trading sessions. Okay. Very stressful, discipline. You've got to stick to your system. You also need, if you're trading intraday, you need a good quality internet connection. That's where our VPS service comes in. You need a good quality, computer or software and device that you're trading from as well. If you're trying to trade on these intraday, very short 5-minute, 1-minute sessions. Less so, if you're trading 15-minute or 1-hour candles or 4-hour candles, which is more my approach intraday. Because then you only need to check at the end of the hour. What's happened in the last hour as something happened. I'll show you an interesting one that's happening. That's just concluded now on the Aussie dollar in the 1-hour time frame. Got me in. I drilled down to the 15-minute time frame, and we're taking a little short position on the Aussie dollar in that very tight time frame. But it's all again because it ticks all the boxes, or ticks not all the boxes, ticks some of the boxes, and that was enough to get me in. It was probable, so I took the trade. So, follow your markers. If you're trading intraday, you need to stick to a few. You can't follow 28 like I do on with my daily time frame, and even the 4-hour I can do. I look at 30, 40 markets, and I can scan through them quite quickly at the end of the day because the market's closed and I don't really care what's going on because it's what's finished at midnight, and so I do that quite quickly. And even on the 4-hour candles, I only need to look 3 or 4 times a day. I obviously can't. When I'm asleep, I don't look at that 4-hour candle, so I don't take that into that consideration. So every 4 hours, I'll click on those. So if you've got say 8 or 9, that's probably about the maximum you want to be looking at. Fit nicely on a screen, and if you can look at them every hour, that's fine. But most of us, obviously not all of us, we're working, or we're students, or we're retired and we don't want to be staring at screens all day or looking at them every hour. Some people do, but again, fit it in around your time scales, because there's nothing worse than if you think you're trading off 1-hour candles and you go out for half the day and you come back and you see great setups that you've missed. That's the sort of thing that nags away at you as well. So if you're down, if you're down trading, scalping, stick to the majors. Even the pound yen, the guppy here, the pound yen can be very, the spread can be a bit higher than the others, so it's not a great one for scalping. But these ones tend to be the best ones for intraday sort of stuff. They're highly liquid, tight spreads. And again, this is just scanned from our website, and also watch correlated trades. There's some comments on the Facebook page in the last few days about correlated trades. So don't make sure you're not all one-sided as far as overexposed to the dollar or overexposed to the a particular currency. So careful you're not long one and short the other. Like we got an example here of long euro and short dollar. Yen is same against trading against the yen, which would probably be quite a good position at the moment, is where the dollar's been going. So look at what you're trading, check what's happening now. So here, whether is it trending, is it going sideways? Here we can see here, most of the markets most of the time go sideways. Here, is it ranging, is it trending? So red line here, we've got a nice little uptrend here. I don't know what the time frame this is from this particular 5 minute. This is a 5-minute chart from the dollar. I can't remember what this is. This was the dollar index. So which I wouldn't recommend you trading on a 5-minute chart. Anyway, so trending sideways, trending. See how that one suddenly went from down to up. They tend to do this though. They tend to go in a direction, then sideways, breaks down, reverses very quickly. And obviously the shorter the time frames, that tends to happen. But the 15-minute, the 30-minute time frames, they tend to do this: ranging, trending, ranging, range. So they tend to go from one to the other. So check what your market's doing. Use the traders board to help you, give you an idea about when you're getting in. So look at the key markets. What's your market doing? Look at multiple time frames. So if you're intraday trading, and this is just you can pick these time frames for yourself, but start with the daily, the 4-hour, and then zoom in, or start with the 4-hour, zoom to the 1-hour, and then zoom in. But look at the big picture. The big picture gives you the key resistances for the day. So again, you can Google anywhere and find key support and resistance and pivot points for the previous day. Lots of sites give you that, and there's little widgets you can program and download and stick them on your MT4 platform as well. So before I'm sort of rattling on here, are many of you intraday traders? Let me just ask that question before I move on to the next slide. So how many of you trade intraday? How many of you trade these 1 hour and 15-minute candles? That's your approach. So I've got one yes, a few more yeses. Okay. So you tend to, you tend to have no trades open over the evening period. Is that what you're saying? So you close for the day, and that's it. Your business is closed for the day. Yeah, most of you, right? So most of you are actually intraday. Saves on overnight fees, Bernard. So absolutely, yeah. Remember, that's swap fees, costs of your. That's part of your trading, and that's why sometimes the spread is a key thing. Obviously, the other thing, you've got to counter that, Bernard, with obviously the longer time frames tend to have bigger targets, but yes, the costs can build up quite well. And some of them some people here are saying they let them ride overnight as well. So most of you are intraday people. Okay, all right. So that's good. I know many guys that do, obviously a lot of you here are saying you do that, and the beauty of it is that you're finished for the day. You switch off, your head can go. You're not thinking about your open trades, your open risk, so the risk is gone down as well. And then obviously your costs of trading are reduced. The only thing about that is, remember, the spread is the same for a guy that's opening a trade for 2 days or 2 weeks to the guy that's opening a trade for 2 minutes, or the girl that's opening a trade, the lady that's opening the trade for a minute or two. So the costs are the same in that sense. So always want to bear in mind. So start with the big picture and zoom down. So again, we'll use some examples in a minute. So depending on how far you want to go, some of you, if you're real scalpers, you won't really be interested in what the daily and the 4 hour are doing. You're more interested in the 1 hour, 5 minute, and the 1 minute. That's what the zero spread account is, Barbara. It's obviously the costs are high when you're using it, but it's from zero as well. Look into the terms and conditions. It's obviously everybody markets their zero spread account as, and the headline is zero spread, but it's from zero, and it's not on all pairs, and it's not at all times. So have a look at it. Look at the terms and conditions. That's why we have so many different types of accounts, Barbara, and anybody else that's interested. But zero spread, that's why we introduced it. To not encourage scalpers, but lots of people want to say they want to scalp, so we brought this product in. So have a look at it. It's a really good account, but don't assume it is zero. It's from zero. It says so. You position your trade basically. So you look at the higher time frame, and then you zoom down to the lower time frames. Be that I've got here a minute or a 5 minute to get your position. You can use different indicators, which I'll come on to in a minute, to help you. When to get in and when to get out. As again, most of you here will know, I love the ATR, the average true range, for giving me a target, either the ATR itself or a multiple of the ATR if the trend is good. I'm a trend trader, a trend following type trader, so I'm looking for overbought, oversold, energy in the market, as I call it, and just a feel for it sometimes. And so I like to use the ATR, the average true range, typically over the last 14 periods, to give me what's likely to happen, what's probable to happen. And I would like to have all those things on my side before I press buy or sell. So in the intraday stuff, and I'll bring my charts up in a minute, I like the, this might sound crazy, but just this has worked for me over the years, 150 moving average, and that's the exponential moving average, against the 5 EMA. So I have the 5 EMA and the 150 EMA on my charts, and I'll bring those in a minute when I got through some of these slides, okay? Rather than me just talking about slides all the time. So that's my moving averages, which I still use intraday, even though they're more useful on a longer term time frame. I still like trends within trends on a day. So we have these crossovers, so that's what I like to see, and obviously these don't happen very often, the 150 and the 5 crossing, because they're so extreme, but when they do, they're quite significant. Okay, so as the 5 crosses from underneath over the 150, that's looking for positive, and negative when we got the 5 crossing down below the 150. That's a short position. So here, oscillators. The two types of options. I tend to use the RSI more than the MACD. To be honest, just gives me overbought, oversold areas, and the MACD is really good for divergence, and that's when it's perhaps at its most powerful. And same with most oscillators, and RSI to an extent as well. It gives you again a heads up, even in the intraday basis, and with these settings 7, 5, and 8, 3 for the MACD. That and it's the divergence is the key thing you want to be looking for sometimes. So that really jumps off the page at you, rather than they tend to follow with what the trend's going. So if they tend to be in line, but divergence is one that is really useful for the oscillators, and that's where they're most powerful, I would guess. And then Bollinger Bands, my favourite again, because with Bollinger Bands you get another moving average in the middle there, the 20, and I have it set at 20 and 2.5, just because it's, although it doesn't get much more by setting at 2.5, the standard setting is 20 and 2. I just added a little bit just to grab sort of 98% I think of all movements, and Bollinger Bands, remember, are just measuring volatility, standard deviations. That's what that 2.5 is, away from the average over the last 20 periods, and so it's got overstretched, and it's likely possible to turn around, but not always. And again, different strategies use the Bollinger Bands in different ways, so that tends to be the ones I use. Mostly this one, and this one. MACD, not so much, to be honest. So I've got some questions here. Would you recommend? Oh, all right, sorry, the question from before. I thought it was a new one. Okay, so next one. Risk management. Again, it's this. It's not really. This is about risk management, but it's not really. Well, it is part of your. It should be part of your intraday strategy. I won't spend much on this today. I'll bring in some slides because we're half an hour through anyway. But this is something I talk about a lot in my all the time, and also I spend a lot of time in the Mind Games webinar talking about it. So always trade with a take profit and a stop loss, even in these short intraday time frames. The 1% rule, so whatever size your account, try and stick to only using 1% because it keeps you in the game. You get it wrong nearly 100 times before your account's wiped out. Risk 10% on each trade and get it wrong 10 times and your account's empty and you've lost all your money. Risk reward, people talk about 1 to 5 or 1 to 3 minimum. With Forex, I'm happy with 1.2 or less than 1. Sometimes my system works like that, but that's story for another day. But ideally look at like 1 to 1 minimum. So 1 to 1.5 or 1 to 2 is really, really good. So 1.2 minimum gives you, if you're going to risk 50, you want to win 60. Or if you're going to risk 5, you want to win 6. Lot size, it's there for a reason. Micro lots. Don't get greedy, get good, get consistent, then increase your lot size. You don't want to, you need a 20 grand account if you're going to trade a full lot, in my view. Anything less than that, keep the lot sizes down. That's why they're there. You can have multiple micro lots on as you build up. So if you start with a small account, you start with 0.1. Build up 0.2, and it can build. Compounding is another story we're not going to talk about today. No, this is risk levels. Again, I guess a lot of you have seen this before, so I'll run through this quite quickly. So if you look how you can make 260%, if you risk 1%, you're gaining 1.5%. You success ratio of 6 out of 10. You still end up making lots of money. Okay, even if you reduce the risk level to 1.2, you don't making very much, and you're losing half your trade. You still, make 50% of your money. When banks are charging you like negative interest rates, you got nothing on your savings. The Forex market is a great opportunity to make a very sensible return based on very, very sensible and very conservative performance figures. 50%, half your trades wrong. The problem with this is dealing with it psychologically. Can you cope with losing 5 trades out of every 10 that you place? A lot of people can't. I find that very, very difficult. Most of us as humans find that very difficult because this idea of wanting to win. But again, that's a story for another day. And it's, I spend a lot of time looking at that in the Mind Games webinar. So have a look at that if you can. Problem is, as I say, most people end up here and end up, risking 5%, trying to win 3%, and end up very quickly out of the money. And you can make very good returns if you keep this this starts ticking up, or this ticks up quite significantly as well. Okay, so keep with it. Robots, enough said. The thing about intraday trading is the news can affect you quite effectively, both positively and negatively. So make sure you've got your economic calendar up and you know what's going to be happening during the day. So today, for instance, the key events today was the pound was in focus because we had some earnings data and unemployment data undermining the market today, and for the week or so is the Fed announcement tonight. So you would expect the major forex currencies to be in quite a tight spread, and they were. And then all of a sudden, London opened this morning, and the pound shot up nearly 100 pips. What caused that was a big fundamental news that had leaked out. The big banks got it first before it broke on the news sites. One of the very pro-Brexit fan of the government had left his position, so that was suggesting that the UK government was going to have to be less aggressive in its Brexit negotiations. So that's perceived as good for the pound. So the pound leapt up. It ticked up again a bit on the announcement that the earnings had come down. Sorry, not the earnings come down. The fact that unemployment had stayed stable, but weak earnings and high inflation yesterday out of the UK all undermined the pound, and so it's come all the way back down again. It's still trading about 127 something. But so you've got to be able to know what your news are. Spreads, as I said earlier, you want tight spreads if you're going to trade intraday, because that's a cost of your business. Like I think it was Bernard said earlier about swaps. If you hold stuff overnight, obviously the spread is important, is part of your cost as well, and don't forget about them. Again, even intraday traders I speak to just don't know what the spread is on the currencies they're trading. I say, well, all right, you're a gold trader. Do you know how big the spread is on gold? It's your money. You owe it to yourself to make sure you're comfortable with all these. Firstly, what all these things mean, but also how it affects you. Just because it looks nice on a chart, what does that actually mean in real terms in money, on your account? And technical tends to be quite a key skill to look at when you're trading intraday on the short-term time frame. On top of all that, remember, news can be very, very significant and move it very, very quickly. And at the moment, we're in a very, very event-driven world at the moment. Certainly since the big recession of 2007, 2008, the central banks have been very much in focus. But politics is overriding everything. And certainly since November, anything Mr. Trump has said or tweeted, or President Trump, I should call him now, has a massive impact on the markets as well. So obviously you've got to have your finger on the pulse with any tweets or news that comes out, and the president tends to tweet at certain times of the day, so just before he goes to bed, very early in the morning, Washington time. So disciplined trader, stay focused, know what you need to learn, accept losing, deal with losses, get good at one particular market behavior, execute yourself, have a plan, try and just do it, automate it as much as you can. It doesn't mean use a robot, at my view. They ultimately end up failing, but one day they are driving the market now. There's more robots trading now than ever before, and lots of automated trading, which is why we get some of these volatilities, because they can't think, they can't understand, perhaps like we can as human beings at the moment, but as artificial intelligence gets better, I'm sure that will become more relevant as well. So think of probabilities and percentages. I always say try and take the dollar value out of it, and learn to be objective. My books, I'll come back to these in a minute. Let's just have a look at some examples. Is there any questions at the moment? I know I'm speaking a bit quickly today, but I just want to get through this about strategy. So let me just go through how I set things up and what I do if I'm trading intraday. Okay? Any questions? No. Right. Okay. So let's just go through this. So here, these are typically, not always, but these tend to be my intraday charts. Not often the New Zealand dollar's on here, but it's not it just is at the moment. It's not typically. It's normally another pound cross on here. So let's just bring up everybody's favourite. Actually, let's just bring up this one here. The one I said we've taken a short position on this one, and let's just talk through it. So this is the Aussie pound. Mohammed, let me just go through the charts and I'll explain what's happening later on today about the Fed, okay, as a fundamental issue, okay. So, right, as I said, oops, the RSI is set wrong on this one. Prove me wrong. So I tend to, for my intraday charts, I have it set up like this. So the green lines here, the Bollinger Band, set at 20 and 2.5. Okay, so this midpoint still gives me a 20 period moving average. Okay, the blue line here, the thick blue line, is the 5 period EMA. Okay, and my not exact rule, but I typically, if the price is above the blue line, I'll typically be more inclined to a long position than a short position, depending on the steepness of the line, and I'll just come on to that in a minute as well. The red line here is that one I was talking about before, the 150 moving average. So here on the 1 hour chart, back in the Aussie the Aussie dollar here went positive. When's this? The 6th of June at 6 o'clock. So again, you could have held that on the 1 hour chart, very positive. So it's above the 150, that's positive. So it stayed above that, so that's relatively looking to the upside. And as you can see all over that since the 5th of June here, it's been in an sort of going up. Obviously went sideways for a long time here, but we've been above the 150 all this time. Okay, so that's positive Aussie dollar on the 1 hour chart because it crossed the 5 here. So let's zoom in a bit. So what's this? So this is so we're generally positive. We've been going sideways. We've been under the 20, and that's not moving very nicely. Get rid of that. So what happened this morning? Well, as I was putting this together for you this morning, I was looking at this and I thought, oh, little tweezer top here on the candle formation. So what we've had here, we've had a strong up move in the last 4 hours. 1, 2, 3, 4. Big one here as London opened. But we had big one here. London opened, and we got a tweezer top here in the 1 hour. So what did I do? I looked at that. That's raised ahead. That's interesting. So here on the 1 hour chart, let's take it. So have we reached some sort of resistance? And it looks like at this level here, this tweezer top, around 75.86. So where does that red line I put in on the 1 hour correspond to what's going on in the higher time frame? Well, look at that. That's also it's a high in the 4 hour as well, although it's still going up. So that's quite a strong resistance level up here. 75.86 or 75.90. It got a wee bit above that, didn't it? So that's once this candle's completed in the 1 hour chart. That's also interesting, but it also gives me a heads up for within the lower time frame. So if we go down to say the 15-minute time frame, that's where I would have got in here on the 15-minute, knowing that this level had been achieved and resistance had been hit at 75.86, the higher time frame. Down here in the 5-minute and the 15-minute, I'll be looking to go short on this. Although we're long in the 1 hour, we're looking for a little turn down in the shorter time frames. And so we're looking, in these 5-minute time frames, we're looking for, what's the ATR here? 7 or 8 pips. So we're looking to nip out 7 or 8 pips there, and we can see quite clearly there 7 or 8 pips were fairly risk-free. If we'd gotten a bit early, we would have been stopped out on that one, but we'd got another chance here, especially here, because here on the 15-minute we've actually broke below the blue line, so we're gone particularly short here. So we'd have had our stop back up here because we know that's a strong resistance level, and we'd have been short all the way here. So these would have been nice short trades here, nice 10. So if we'd got in here, another one there that went all the way down here to 75.52. This is what, 75.81. So 30 pips on the short hour time. It's quite comfortable, quite low risk ones because of what the higher time frame was doing. Okay, so, and backed up by all the other things that were going on. Again, as I say, we've still the trend is still on, but in these lower time frames, we've got these short positions that have comfortably got us in lots of little positions there as we've come down. So short 10 pips, 20 pips, let it run to your target down here. Could have extended the moving average here. Okay, so let's just go back to the high time frame, the 1 hour. I tend to not trade much below the 1 hour. So tweezer top confirmed it there, so that would be probably, if I'd taken this trade, I would have got in here at the end of that. That was confirmation enough for me because we'd had a strong up. Look at that, 1, 2, 3, 4, 5, 6, 7 hours up basically without a break. We had a bit of a downturn in the second hour, but overnight obviously doesn't perhaps count as much as early morning European session. Interesting to look at big strong up tooth and move down. So short here, see how we go down, even though we're above this. As I say, the 5 is still suggesting up strength. I'd be looking for perhaps a retrace of this big candle here, perhaps to this point, and that's all what would happen, doesn't it? Obviously, when that closed at what time is it now? It's that closed 30-40 minutes ago, so we might have been up here. So I would have had my stop up here, and my first target would have been back down, probably to the blue line, the 5-period EMA, which has sort of got quite close, and it might have touched it in the shorter time frames. Okay, but as I say, even before this had closed, we would have had some lower time frame trades on this, because the little pin bar there was saying go for this as the completion of that hour candle was there, this second blue line. Okay, so short, stop up here, off we go. Back to, on this one we might have had a target back down here at the 20 period. Okay, does everybody follow that? Does that all make sense to everybody? Grace is saying here, I'm an end of day trader, can you also help me do analysis like that? It's exactly the same, Grace. End of day is much easier because not the markets are closed, but the analysis is the same. Whether this is well, my approach is the same whether I'm trading on 1 hour, 4 hour, 1 day, 1 month, because my theory is the same. I'm looking for trends and I'm looking for targets based on the ATR. So obviously here on the 1 hour, so let's use this as a great example. So the 1 hour here, the Aussie dollar, the ATR, the average true range for the 1 hour is 9 pips. If we go up to the daily, the ATR is 50 pips. So the theory is the same. So as you can see here up on the daily, the Aussie dollar is bullish up on the daily. So those intraday trades were very much against the higher time trend. Okay. So again, looking at this it's a bit different upon the daily, but here this is bullish on the daily because we've got the 5 crossing above the red line at the 150 moving average. So the theory is still the same. And also the other thing, we're in the top half of the Bollinger Bands. The Bollinger Bands are pointing up with a nice angle. It's not too steep, and so therefore that would have been perhaps an entry point when that crossed here. So this is bullish, and that explains perhaps this run up today because of this people buying from this cross potentially. So a 50. So here we've got a higher target, 50 pips plus, but obviously our stop losses would be higher as well. So Grace, it's exactly the same approach. It's just the beauty of the end of day trade, you haven't got the price moving around quickly. Obviously, if we go down to let's do it the other extreme then. Let's go down to 5 minute. As you're trying to analyze what's going on in the 5 minute time frame, the chart's moving around very quickly with you. So we've got this much more of this, this I don't know where those lines have come from, but much more movement going on. But the theory is sort of the same. So we've had that long run we've had this morning. So this is going back to this morning. We've had this. We saw in the hourly chart uptrend, and so here you'd expect this obviously in the 5 minutes. So we're above the 20 period here. So we've had a long up run. top of the Bollinger Band but come back, so nothing to say sell any of that. Yeah, and then we've topped out at this level here that we put in, we identified earlier. So this is these, you know, we've big stretch. Was that a stretch? We didn't really see. That one would have been an interesting one, and that one on the 5 minute was suggesting there's more energy in this, because this big candle here, again, this is, remember, this is only 5 minutes. Big candle here, we didn't have a reverse in it, and we had quite a big wick on there, so there have been lots of people, in my view, whatever time that was this morning. Again, let's have a look at that one. Been really interesting. 11:30, there you go, 11:30, everybody's up, you know, 9:30 in the UK, market's open. This is obviously the big market open, but everybody's sat at their desk who's trading, who's in this. Let's long the Aussie. So off they went. So they've been long that. We've taken it to that target we identified earlier, 75.86, 75.90. Thank you very much. It's bounced off that, but it's still relatively strong, as you can see here on the 5 minute, and it's still, oh, my chart's slowing down. So we've rolled over a bit, but we haven't rolled below this. I don't know, when did I put that line on? 75, 78 or 75.80. I don't know why that line's on there, but it must have been from yesterday. But as you can see in the 5 minute, we've sort of held that. So we've gone a bit under the 20 period, but we're going sideways. Bollinger Bands are sideways. We're under the 20 for now, so we might be coming down, but that looks like a quite strong. So, you know, if you're trading this intraday, I can't tell you what to do, but that's a strong support area ought to be tested, because it's it's on the even on the 5 minutes. So interesting sideways overload. But again, you know, today's an odd day simply because everything's waiting for the Fed. Then you look at the fundamentals of this particular currency. Well, it's the Aussie. How many people are actually trading the Aussie at this time? Well, obviously most people that trade the Aussie are Australians, and they're asleep. So people that are coming in to trade this now will be Americans, particularly on the North American session. So has it had its run today, or is it being tested, or is it just waiting now until the Fed announced tonight? So who knows? Again, this could have been, you know, the market. This is the 1 hour chart. This could be just the market makers having a bit of a game overnight. Obviously, the Australians are wide awake here, trading it. UK come in, big move up. So there you go. So let's just go back to Mohammed's question. So again, regardless of what you're trading, my approach and philosophy is the same. You know, and you could apply that to any different chart. So let's just, you know, let's go through. Let's pick another one. I don't know. Somebody pick a. I don't know. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So somebody give me a number between 1 and 14, not 4. First one, that's be the next chart we look at, just in complete random. We'll see how we do that. So a number between 1 and 14 for 23. Thanks, Bernard. Thank you, Blessing. You're playing the game. 1, 2, 3, 4, 5, 6. 6 is a Swiss franc. So same theory. So let's have a look at this. So let's go up to the certainly what I would do on the intraday. So daily, it's in a downtrend, and it may have broken up over a moving average, which that's interesting. Okay, that's all I'd do if I was trading this intraday. Okay, so I'm not trading this intraday, but we've been in a downtrend, and we may be, depending on how we finish today, we may be breaking up. Okay, so what's the 4 hour telling me? Yeah, same sort of downtrend. We've gone sideways. That's, yeah, that might be part of the, we're going up on the daily. Actually, let's put the, so our daily resistance is this line here. On my approach, I'm not saying this is right or wrong, but for me, the daily resistance is that 20-day moving average at 97.07. Oh, look at that. It's a big round fat number, 97. So I'll bear that in mind. 97 is a resistance. Where does that look on my 4 hour chart? Well, it's about there, isn't it? So let's put the line in at 97 as well, because that's probably quite an important number, because it's a round number. So let's put another line in at 97. That might give us some fun and games intraday. Oh, let's just change that to so that's a, you know, psychological big fat round number 97, and we've bounced, we got through it a couple of times this morning here on the, or a couple of times we've, you know, I don't know what's the matter with my mouse at the moment, so it's not playing games very well. Sorry. Perhaps it's the battery running out. So what was I saying? Right, so we've got the daily resistance at 97.07. That's a 20-day moving average resistance. It certainly does burn it. Hitting some substantial resistance, possibly. Yes. See how that's, and see how I've put the again. See how these psychological round numbers come into play time and time again. Let's go back to whenever this was. Back to the 22nd of May. This was support, 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 support. Broke up. Back to it. Resistance, 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 resistance. Bang. Resistance. A bit over it. Resistance again. So key resistance area. Just here, very, very clearly here on the 4-hour chart. Yes? I haven't made this up, honestly. This is just a chart that Blessing took, and this is just what these sort of things should be jumping off the page at you now. Okay? Regardless of how big a screen you have, regardless of how zoomed in or zoomed out you are, these things will start to, the more you look at them, they'll become clearer. So we've got to, 4 hour, we've had a good 4 hours. We've had a good morning for the Swiss franc against the American dollar. What's the 1 hour telling us? Well, it should be the same, shouldn't it? So there we go. There's the 4 hours. 1, 2, 3, 4 strong up hours. Is it looking a little overstretched in the 1 hour? Maybe, because we're at the top of the Bollinger Band. Look how steep the 5 has got. It's crossed the 20. It's above the 150. So it's strong. It's strong. Is that going to go 1, 2, 3, 4, 5? Well, it could do. The reason I'm saying it could do is because we had a bit of a question mark after the 4th hour. 1, 2, 3. People would have got out, and look where that was. Look, it's at that big round number again, 97. So a lot of people would have got out, got scared, or banked their profits because it's happening down at the lower time frames. But the market's moved on up. So this is still strong in the 1 hour. It's perhaps got a little overstretched because of the steepness of the 5 EMA here. So we might be looking to, where's the next resistance? Well, it might be a bit higher up on the 1 hour, but it didn't happen for very long, did it? Last one was there, 97.10, and then the next big top was, when was this? This was way back when. This is the morning as Europe opened back on the 9th of June. Tweezer top there, 97.26. Could we get there today? Well, we may, depending on what the Fed say. So it's nothing to say sell that though at the moment. There's nothing to say that it's rolled over, it's run out of energy because it's broken above this. Okay, so again, Bollinger Band's going sideways. No particular trade there for me, simply because it might be looking to roll over through this resistance level on the 1 hour. But if we drill down, is there anything to say hesitation? Well, not really. We had a down and then we've gone back up 15. We got on the 15, we're at a new daily high, and a high for from the 13th of June, from yesterday, high point. Again, 5 minute will be the same. Yeah, new high on the 5 minute. So nothing to say sell that. Would I buy this? Well, you could. What you could do here is, although it high, it keeps going. That rolled over a wee bit. That one wasn't a tweezer top because they were both green. That one, if this 5 minute finishes here, we might be getting a bit of a tweezer top here in the 5 minute. A short down to the blue line, a few pips there. We haven't got the ATR on this one, but that's potential here on the 5 minute, simply because it's looking overstretched on the 1 hour. Okay, that's how we did that. But it's potentially overstretched because we're out of the Bollinger Bands, but we've broke it, and this time we've broke it quite well. So again, where are we now? What's the time now? 8 minutes. What you'd like to do is make sure that this candle confirms that it's broken out. If this candle in the next 8 minutes closes back at the Bollinger Band, that's suggesting that the strength might go on. If this closes like it is in the next time, which is probably quite likely because we've only got 5 minutes left, that's suggesting that's overstretched and there will be some pullback. So this might have already started here on the 15 minute. Look at that. You think I'm making this up, wouldn't you? There you go. So it's sort of hit this level again, 97.07, the one we got on the 1 hour. So it's hit it there, hit it down the 15 minute, and it's looking to pull back. So again, on the 15 minute, you could look for it perhaps to pull back here, that sort of gap, or even lower down. We might have already hit the top. Well, no, the top, yeah, that's the top we've been through. You would expect us to go through the top. So yeah, there you go. As we were speaking before, saying this short position on this 5-minute one. Well, there you go. We've had our few pips there. But again, you obviously trading down here the 5-minute. What's the spread on the dollar Swiss franc? Well, it might be. Is it enough to get those few pips? Well, that's what the zero spread account can be all about. So, as I said to Grace earlier, it's doing doing the same thing and just repeating it. So that's why opportunities are knocking on the door all the time with Forex, but you just need to decide what's the time frame you want to trade. Can you trade at those time frames, and trade trade when you can, not when you want. Oh, sorry, trade when you can as well as when you want to. Let me just minimize that down again. Oh dearie me, what are we doing? So that's that's $1. And so you can do that, if you've got 5 or 6 assets you want to trade, you can do that, every hour or every 15 minutes. But you've got to stick to your time frames and drill down and see where you go. So, Aussie on the, let's just recap then. So Aussie on the 1 hour, tweezer top, short position, possibly down to this moving average on the 1 hour, and it looks like it's it's hit that. We got the 15-minute one as well. What was the other one we looked at? Swiss franc, strong in the, let's go back again. Strong in the 1 hour. Looking it was overstretched. Wait till this candle's finished. Is it going to finish high? Is it going to finish low? Obviously, the close of the candle is the most important. But we've had 1, 2, 3. Nothing to say it's going to roll over in the high time frames, but the lower time frames, again, no good. It's kept going, so it's looking to close the hour quite strongly. So again, at day highs on the 15-minute. So no short positions there. And that's what you do. Any questions before I go? The hour's up already. Again, it's amazing how quickly the hour goes. No? Very quiet. So again, I'm sure a lot of you have seen this, but basically, the markets haven't changed. If you're only going to buy a few books on trading, buy this one. It's all about trading. It's stories of Jesse Livermore, story of written by Edwin Lever back in 1923. Another great book. Well, they're all great books. All of these books are great books, especially the first 4 or 5 have I got on here, or 6 in fact, isn't it? But the Trading in the Zone is available as a PDF download. Disciplined Trader, the original book written 10 years before that. But Trading in the Zone, I know, is and the Stock Operator here. They're PDFs, so Google these, and you can, you don't even have to buy the books, but you owe it to yourself, I would say, to buy the books. Somebody's written in here, Wesley, I hope you don't mind me using your name. Wesley's written here, nice webinar, Stuart, thank you. I was scalping the cable as I was listening to you. Well, very good. I'm glad you did well, Wesley. So, Reminiscence of a Stock Operator, strongly recommend. Anything by Jack Schwager is great. These 2 books, again, written in the 80s, but New Wizards in 92. Stories of people who know what they're doing, successful traders, whether they're bond traders, commodity traders, stock traders, forex traders. They all have, the story's the same. You speak to these guys, these interviewers, and they all have the same idea: patience, discipline, stick to a strategy, don't get greedy, don't get emotions in the way. And nothing's changed in the markets, and nothing will. When I stop trading, the markets won't change. And the sooner you learn that, the sooner it goes click in your head, the better trader you'll become, because you'll start to understand yourself. If you're completely new to forex trading, the book I'd recommend is Anna Cooling's Forex for Beginners. She has a philosophy very, very close to the things I talk about markets and understanding yourself. But what she does, a big fan of, is volume. She looks at volume. She trades futures. She has her own website as well. She's written a few books now. Nicholas Tubbs of the Black Swan, that's all about probabilities and randomness, Fooled by Randomness. That's another good book as well. His first one was Black Swan's probably the most famous one. But it's all about knowing yourself for me. And I'll just finish with some quotes by the magic man Livermore himself. The market is designed to fool most of the people most of the time. The only thing to do when a person is wrong is to cut your losses quickly without hesitation. You know, emotional control is the most essential factor in playing the market. Never lose control of your emotions. We're emotional beings by our, by the way we're made. Don't get overconfident. Don't get too despondent. You hear me say all these things because it's it's stuff I've read time and time again, and it's true. The markets haven't changed. All through time, people have basically acted and reacted the same way in the market as a result of fear, greed, ignorance, and hope. That is why the numerical formations and patterns, which candle patterns give for us, recur on a constant recurring basis, and that's why lots of mathematicians throw lots of algorithms at the markets. But there's nothing new in the markets, nothing new on Wall Street. What has happened in the past will happen again and again and again. This is because human nature does not change, and it is human nature, emotion, solely built into human nature, that always gets in the way of human intelligence. Of this I am sure. Great traders don't have to be clever people. They don't have to be bankers. They don't have to be economists. The best traders are the people that know themselves and they can accept losing. And that's why women tend to make better traders than men. The problem is there's not enough women trading for some reason. But anyway, that's a story for another day. So look, shows how all these slides are. It's a bit embarrassing. It's November. So that's the last time I did this trade. So I hope that was useful. Any questions before I go? My 10-second countdown. All very quiet today. Thank you, Wesley. No problem. Thank you, Bernard. 23. Very interesting. So if you haven't got the app, download it. We'll see you next week. Or no, what am I talking about next week? Tomorrow. Tomorrow, Andrew's got a webinar on candlesticks, some of the key candlestick formations. I've talked about a few today, but there's loads and loads, and don't get over complicate trying to follow them all again. Just there's some key ones. Barbara, yes, Elliot Ways. I'm sorry about that. I will have this scheduled, and perhaps we'll do 2 next month. Okay, so I'll get Alvaro to do his second one, and we'll do another one as well. Okay, and I'll send you some links to some good Elliot Wave stuff as well if you're interested in Barbara. Okay, I'll drop you an email after this one. Okay, so any questions for me, send them to webinars@hotforex.com. Analysis.hotforex.com has got all our analysis on it, obviously, and the Facebook page as well. Stuart, Hot Forex, Cowell has our Facebook page. We've had a couple of trades hit target 2 this morning, a couple of 100 pips bagged again. One of them was actually from a webinar last week, I think. So come to our live analysis webinar as well, and we'll see how we get on. Okay, take care, everybody, and thank you for your time. All the best. Bye-bye.